Hello dear traders, petar.jacimovic here from vikefanalysis.com. I found an interesting development here on the USD Japanese yen, and I will explain you the reason why I'm expecting lower price, and this may be a potential good setup. So this is the 15 minutes time frame chart. This is USD Japanese yen, and I found the largest actually volume happened in this bar here. So this is a climatic action. You see the volume spike here and the tick volume, and there is a wide spread of the bar, but bar closed even below the middle. So this is a first major sign of the weakness, according to my opinion. This happened on the highest high point for today, which makes this sign of weakness even stronger. And this is a first clue that sellers are very, they're still present in the market, and that buying looks very risky at this stage here. In the next few bars, we saw that supply actually came in, but that another demand, but that demand still didn't break this high of this bar, and also bar closed in the middle. So this is another sign of the weakness in this bar here. Also, there is also high volume there, so still supply present in the market. And supply reacted here in the next few bars. We got the supply in a high volume. But later on, price actually managed to test a few times this, let's call the resistance cluster here, or supply cluster. And you see this bar, for example, this bar and this bar, they're all signs of the weakness and exactly in the same area. So from that point, we got a serious sign of the weakness there, according to the 15 minutes time frame, and the price went lower. Then price reacted higher again. Price this bar closed in the middle, and supply reacted here, and then the demand again came in. So a little choppy right now, but still there is a major sign of the weakness from the top here. In the highest volume of the day happened in actually the Asia session. Pardon, here on the London session, which make this this is a highest traded volume, and this is a big sign of the weakness. So I'm expecting a lower price. I have some small position here, sell position, and again I put a stop loss above this cluster, where above 5 pips above the cluster. So if the price go above, my idea will be invalid, and I will cut the loss early. So far, again, we are in some choppy market, but again, major signs of weakness for today happened near this cluster. Also on the futures market, I can put you this chart here. On the futures market, also here in this bar and in this bar here, as you see, this bar closed in the middle. This is inverted relationship. This is a yen USD on the futures market, and on the FX market is the USD Japanese yen. So basically this is sign of the strength on Japanese yen USD. Here almost the highest volume traded for today on the futures market as well. So my target is actually set near the low of this upward channel. So the area around 106.40 is the valid pardon, I got here, okay, is the valid target. So also I want to speak about the volume generally on the forex, because I got a lot of questions about the volume on the forex market and how I look the volume, and do I actually believe in the volume on the forex, and I got a lot of questions about that subject. So let me clear something. We have the centralized markets like futures market, stock market, where actually the volume is the number of contracts traded for a specific period. So that's actually the centralized volumes in centralized market. On the currencies, on the FX market, on the FX spot market, we don't have centralized, because Forex is over-the-counter market, and there is no centralized. It's not centralized. But for example, the volume you see right now on the chart is the tick volume. The tick volume have got nothing about the real number of traded lots or something like that. So this is the tick volume number in changing spirit. You know, how many time price changed from the opening, that's the ticking, you know, and you see the tick volume is represented only the number of changings per specific time of period. So that's not so relevant. If you watch just tick volume, you will not have exactly clue what's going on in the market. So basically what you need to watch, and how I look the volume analysis, is I don't use too much tick volume when I trade. I have on the chart tick volume, but actually I watch the futures market, and also there is broker houses which offering the real volume for that house. For example, the largest broker house for the in the retail sector, and basically the broker house where the traders trade, where we got the largest liquidity about the positions on the Forex market, is actually the Saxo Bank. We have, I think, about 13 billions in average per day traded volume there. So that's a very big volume there, you know. And they offer to actually to have exactly lots traded by their clients and the number of transactions by their clients in the real time. So that's actually centralized volume, because it came directly from the from them. So they offer that kind of information if you have the live account, for example, with Saxo Bank. And their largest, again, 13 billions usually in average per day, 13 billions traded. So you have a big clue. This is the biggest average lot size, but from all broker houses trading the Forex. Now you have also the few large broker houses with 11-10 billions per day traded volumes. For example, you have the FXTM, which got about 11 billions and so on. So all of them basically they offering the real volume and volume traded by their clients, and the number of transactions traded by their clients. Now you use this volume which they offer, and you got a very clear picture. Because if you have, for example, the few largest houses, and you see how the traders traded by and you see the lot size traded on them via these brokers I mentioned, you have very big clue what's going on. Okay, you don't cover, of course, everything, but you cover very big part. For example, like 60-70% you have evidence of what's going on, of the volume, of the real volume, not the tick volume, the real volume. This is a big thing, because it's, again, since if you don't use volume, for you this information is nothing big, but for professional traders to have this kind of information and doing the volume analysis and watching the price action, the volume is actually everything. So you gather the largest houses, feed their volume, their real volume from their clients, and if you have the few largest broker houses volume, you absolutely have clue what's going on, because the rest of the broker houses on the market, they're not even close to the volume size traded on these, for example, top 5 brokers. You know, you have the Saxo Bank, you have the FXTM, there is also few others, there is Oanda and so on, but the 5 largest got, for example, close to 50 billions traded volume per day. So this is a very big clue which reveals what the smart money is doing, and you can basically follow them, observing also volume, real volume traded by on the largest broker houses. So this is the one big thing I want to tell you. And again, for more information about my analysis, and if you want to learn actually my method and start to think professionally, you know, and don't go with the crowd, you know, usually the people are not so informed, and the lack of knowledge and lack of information cause them to go and to establish very bad results. So basically the retail sector and the crowd, they trade basically what they read, what they saw on the internet and stuff like that. They don't have exactly clue of what is the real information they need and what's the real thing on the any financial market, and that is the volume, because volume is the liquidity. Volume is something which every professional analyst take care. And like you will read every largest investor in the world traded and use the volume in the analysis. You can combine volume with your techniques and something like that, but the volume price action analysis is the key element of pretty much every professional trader. One thing here which happened right now is we got climatic action. We got 15 pips bar spread. The bar closed well off the highs. This is another sign of the weakness, and it happened also near the cluster from this stage here. So I'm really expecting lower price on this one. I don't think my stop loss will be reached and something like that, so I'm still holding my position and expecting a lower price and potentially 60 to 100 pips to catch the take profit. But we will all for this analysis. If you like my analysis, feel free to contact me on the Skype, and you can ask me about the mentorship program there. Bye for now.